But I want to read to you what Elon Musk, his tweet was earlier today regarding the Tesla situation. We are concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. Tesla will not be selling any Bitcoin, and we intend to use it for transactions as soon as mining transitions to more sustainable energy. There are a lot of loaded comments in that to help us make truth out of what might be a new big lie. We're going to invite into this stream the Director of Research from CoinDesk, Noelle Acheson, and it's good to see you again, Noelle. Let's get right to that whole thing.
Thanks so much for having me. Great to be here.
You're welcome. Green energy and this discussion we have among all our friends that Bitcoin mining creates or uses mass amounts of energy which are generated by fossil fuel burning coal, which destroys the environment. What's the truth?
The truth is that we are witnessing some four-dimensional chess. I should caveat that nothing I say is investment advice, and it's my opinion, not that of my employer. But let's say the Tesla people, Elon Musk, they're pretty smart guys. But let's first unpack what happened here. In February, he bought Tesla bought $1.5 billion worth of Bitcoin. And he did say yesterday he's not selling any of that. What he is doing is retracting the right of clients to pay for Teslas with Bitcoin. Back then, it was very much a PR stunt, even enabling that in the first place, because if Bitcoin is a reserve asset, a hedge against fiat debasement, as they pretty much said with their purchase, then why on earth would people use it to pay for something? In much of the world, that makes sense. They don't have access to anything better. It's the better alternative that they have. But let's face it, the cohort that are going to be buying Teslas, they probably have better payment options available to them. They could use their Bitcoin stake to take out a cash loan, for instance, and still keep Bitcoin as the fiat debasement hedge that Tesla implicitly recommending that it was. So what are they doing here? What I think they're doing here is they're starting the conversation, or they're kickstarting the conversation up to a different level. This conversation is something that we've been seeing gaining some volume over the past few months as Bitcoin's price goes up. Obviously, the criticism will intensify. And one of those fair criticisms is that Bitcoin does consume, it is powered by some fossil fuels, some contaminating energy. But what Tesla got totally wrong in their statement is that that percentage is increasing. It's not. That's factually incorrect. It's decreasing. Bitcoin is increasingly powered by renewables. And I don't think Tesla would buy $1.5 billion of Bitcoin without at least getting some of their facts straight. So what really are they doing here? I think this is a four-dimensional chess PR stunt.
Well, and Noelle, as we try to unpack this, I think the reaction in Bitcoin has caught a lot of people by surprise because it is now under $50,000. We're seeing a big move to the downside today. Yes, Bitcoin is always very volatile, but do you think that this is bad news for Bitcoin, or is this something in a few days it's all just going to blow over?
I think it's in a few days it's all going to blow over, because one thing that's totally guaranteed, Seana, is that in our industry, there's always a more fascinating story tomorrow. Just when we think things can't possibly get more interesting, they really do. And so we saw Bitcoin plummet on this because Elon Musk is a very smart man, and what Tesla does, we should pay attention to. But once people start to poke through the holes in this statement, they're going to see that it is nothing more than a kickstarting of a conversation that really does need to happen. Anyway, we have to also remember what else is going on. We saw the inflation figures come out, and they are going to hit risk assets. I mean, Bitcoin is often touted as an inflation hedge. I think it's more accurate to call it a fiat debasement hedge. They're related, but not necessarily the same thing. And with an inflation hedge, you do see risk assets get hit. That's also probably partly in play here. And the fact that Bitcoin has been appreciating quite handsomely since the beginning of the year, some kind of correction at some stage is inevitable. So part of this is probably the knee-jerk reaction to the Tesla statement, but only part of it. There's a lot of other things going on as well. And I think the Tesla statement really is no more than a PR stunt, which will blow over. It will have the effect of kicking the conversation about Bitcoin's energy mix up to a new level, which is very welcome by the Bitcoin community. You've seen on Twitter, you've seen on all sorts of media, people coming out to show that it is increasingly powered by renewables. That's a conversation that Tesla, I'm sure, is very happy to get out there.
Okay, the environmentalists watching us will be pleased by that. Let's talk about the investors. You just used the term that it's better considered as a fiat currency debasement hedge. We're about to borrow trillions more dollars, whether it's 600, billion or a trillion for infrastructure. So there might be debasement of the U.S. dollar. Shouldn't we be seeing Bitcoin go higher? What might we be missing?
Well, maybe we can look at the fact that it is going higher and that it's not going down even more, given the inflation shock. The previous guest was talking about the inflation surprise that came out. And let's face it, if the inflation surprise is going to kick yields up, that is going to affect risk assets across the board. One of the things that has been powering Bitcoin over the past few months is that yields are so low that it doesn't matter that Bitcoin does not have a yield. We have the same kind of arguments generally, not recently, but generally powering gold as well. When yields are low, yield-free assets tend to do better, especially in the case when they're talking about limited supplies. With yields going up, then risk assets tend to get hit. And that's very much what we're seeing here. Longer term, however, as Tesla, I think, is reminding us with all of this, fiat debasement is the bigger worry. Fiat debasement comes through increase in the money supply, which nobody can argue is certainly happening at unprecedented rates. And that's where Bitcoin can shine.
Always love it when the people from CoinDesk give us a better insight into what's happening with crypto and Bitcoin. Noelle Acheson is CoinDesk's Director of Research. We appreciate your comments.